Millennials are getting married again after 2 years of online dating, but people couldn't meet each other. So you have this entire generation of millennials getting married, forming families, and moving to areas where the weather is good, the taxation is good, the business environment is good. They're moving because it's easier to move now. More companies allow for hybrid workforces. And I think that will continue to drive demand for housing in America. There's between a 3 and 5 million home shortage in America right now for the amount of demand there is, certainly with affordable housing and anything else. So for me, real estate, I think it's the one that's going to hold up very strong, even though I look at everything and I see that all the commentary and the economists and thinking that this is going to be like 2008 or worse. After World War II, the United States has experienced 4 times in what is it, like 80 years, where real estate prices have gone down. And on a national level, 2008, real estate prices came down by 20%. That's it, on a national level. So to me, it's real estate is pulled forward. Prices have pulled forward, fine. But I think it's more going to be about prices evening out and staying where they are and for the economy to catch up to them, more than this huge crash that everyone is predicting. And I haven't seen a lot of predictions that everyone feel like that's when it's going to happen and they come true. Because think about it. If everyone's saying, don't buy real estate right now, if everyone's saying that, then it means the prices right now are pretty much fair. Because if everyone's trying to negotiate down, if everyone's trying to get a deal, if everyone's avoiding this, then you have really the buyers that are out there right now are not paying euphoric prices because they think they're going to flip this tomorrow. They're trying to find sensible prices, and I can see that in the deal flow that's presented to me on the quarterly basis from my REITs. Plus, there's a lot of institutional investors. When I first tried to invest in real estate in 2008 and 9, I flew to America with my girlfriend, now my wife, and we took a realtor, and we, from 8 in the morning till 6, 7 in the evening, we drove around all the MLS listings and made a gazillion offers. And you don't do that anymore. It's the world is real estate has changed. There's so much more demand for it from institutional investors. Back then, I couldn't invest with a REIT. Anyways, I think real estate is it's in a much better spot than most people think. And if you just do some real research, call realtors, call REITs, say, hey, I'm a potential investor. Tell me about this fund or this fund, and see what they say. And listen to the real world, not to like predictions from economists. Yeah. So that's real estate. And by the way, if you go to wealthresearchgroup.com/pain, PAIN, that's a lot of research that I put together on the real estate market, the housing market. We talk about it on our free newsletter, but I think that report, which has a lot of graphs and charts, is some good meaty research for everyone listening.
Yeah, I think it's very dependent. I mean, the real estate market where I am is definitely corrected, but like you're saying, I don't think it's going to be a 2008 just because we're kind of getting this shock where maybe some people are a little more patient. The realtors actually have to work a little harder to get a house sold. I don't think makes too much of an inbounding difference from the fact that, banks have made it extremely hard to even get mortgages from 2008. The stress testing has really gone up. So there's like a lot of factors at play, right? So long term, I think you're right, depending on the market you're in, so long as you're not in like a crazy growth market. I think there's a defining factor between the growth markets and the rental markets. Toronto, where I live, is more or less a growth market, so the rental prices disconnect from the underlying fundamentals, which scares the heck out of me for living here, and I'm sure most Canadians experience that when the average house is over $1 million. But in most of the US, when you're looking at like Vegas, Texas, like you're saying, with all of this, the people moving out of California, moving out of these high taxation areas into these low taxation areas, the weather's a little bit nicer, per se, depending on if you're moving closer down to Texas, I'd imagine, or from California's already got nice weather. But nonetheless, putting that aside, let's kind of just expand a little bit farther. Crypto, man, we're seeing things absolutely get devastated here. I mean, I've slowly started dipping my toes back into the crypto market. But I mean, when you're looking at this crazy, I mean, this is stuff that we saw years ago with the likes of Enron. I mean, we're talking about 30, $50 billion market capped, cryptocurrency companies literally go to zero. Terra Luna, Celsius. I mean, this is something you could make movies out of. What are your thoughts on the crypto market?
Crypto came about in 2008, right? So the entire crypto time horizon has been built on one phenomenon where the central banks keep rates of 0 to negative and create more credit. We have never seen it in this new paradigm that we live in now, where the world is deglobalizing, and it's problematic in terms of regulations. And you're seeing a lot of centralization in crypto and a lot of consolidation in crypto, the opposite of what the original idea was. It's very institutional today, and there's going to be way more regulations in the future now that a lot of big-time investors have been hurt, not just small-time individual people. So that's one thing. A lot of regulations are coming. Secondly, it's very connected to tech and to growth, as you can see from the correlation with the NASDAQ. It's clearly decoupled itself from calling itself digital gold. I think in general, it's an asset class that you need to be, it's almost like Abraham Lincoln said, if you need to go through to get from point A to point B, but there's lions and tigers and everything in the middle, I mean, you could do it, you could get to your goal, but why? Like, so for people who are willing to go through all the roller coasters, it's an asset class that is that you need to understand will go through 50, 60, 70, 80% drops like it's nothing. Still, we haven't seen what we call the killer app. We haven't seen where it's becoming like an email, like everyone needs crypto. There's no really big reason. I've never transacted with a cryptocurrency. I've never needed a cryptocurrency. True. So we still haven't seen that, and that's something that this industry needs. It needs to see some sort of a real reason to own it, and transact with it or use it or do something with it.
Yeah, I think the idea of it being kind of for Forex, something Kevin O'Leary talks about a lot, something that I've noticed as well, is like if you're trying to send money, obviously, across the world or whatever, it's a little easier than trying to send bricks of gold. But at the same time, with such a volatile asset, it doesn't really make sense because the value you're going to be trading it for on the other end, even within 5-10 minutes, could be pretty dramatic. But I've kind of started to look at it as more of like art with utility. Go look at like the shoe market, the Pokemon card market, NFTs, all that stuff has become Rolex is for the first time rolled over, and we're seeing dramatic drops in the value of watches, right? But all of those things have utility, but not real utility, right? Like, is a Rolex tell the time any different than my phone or a cheap watch I get at the dollar store? No, not really, right? Because it's the art value of it. So, I mean, if you believe in blockchain, you think there's a future to it. For me, I only play with the big guys. I'm only buying Bitcoin. And again, you got to buy it presuming you're just throwing your money into the fire, and don't look at it for 10, 20 years, and just understand that if blockchain is something you think is going to be around in 10 or 20 years, then, maybe place a few small bets, because $500 could go a long way in a volatile asset like that, right? But again, it's just one of those things I don't think people should be over leveraging. And I see a lot of YouTubers that have like 50% of their portfolio in crypto, and to me, that's just like ludicrous. It's way too volatile of an asset to do something like that. But finally, kind of pushing over gold, man. Gold has been something I've had a hard time wrapping my head around, because obviously as the US dollar strengthens, gold weakens, but at the same time, we're discovering gold assets now that would double the supply on the market. There's no way to even bring that kind of thing. Where was that discovery? I'd have to double check. Was it Uganda? I can't exactly remember. I don't want to throw a place out, but I'm sure you saw that article where they discovered like trillions of dollars worth of gold in the ground, and they're like, oh, this is what it's worth, but like there's no way you'd get it out of the ground and flood the market and get that kind of value out of it. But then at the same time, you're looking at all the reserves stack gold like crazy. There's a lot of countries talking about going back to the gold standard to get off the US dollar reserve. I mean, the gold has become probably one of the most hard to understand, perhaps one of the most manipulated markets. I don't know. What do you think about gold right now, man?
Um, I think in 2022, gold has done what it's supposed to do. I think it's down like 3 or 4%,
Yeah, it's definitely
and
stable.
yeah, and it's definitely a hedge against other things. If you value things or price them in gold ounces instead of U.S. dollars or whatever else, and you look at um, some of the repricing that we've seen with world-class companies, Netflix and Meta and PayPal and whatnot. So uh, when you see that, then you understand the value of owning some gold in your portfolio, because here's an asset class which is able to sustain a lot of this volatility and a lot of this panic and everything else. So I think for what it's supposed to do, which is to be 5% of somebody's net worth or portfolio, etc., it's done very well. Because if you've held gold ounces this year, and now you want to sell them and buy stocks with it, then you've really hedged. So, and you've hedged outside of the market, right? It's one thing to short stocks, and then you take the risk of short squeezes, etc. This is something that's outside of the market. So I think it served its purpose for what it's supposed to do this year. But when you look at what's really happening in 2022, you see that the dollar has risen year over year to an area where it's at a 21-year high compared to other fiat currencies. It's actually at par with the euro for the first time, I think, since 2002. So basically the euro's inception. And I think that what we're seeing around the US dollar is that this strength is because everyone is selling. There's a lot of selling. The 60-40 portfolio, in other words, 60% with the bonds and stocks, the classic retirement portfolio is having its worst year since 1932. And so everyone is selling. And when you sell bonds and stocks, you settle these in US dollars. There's a big demand for just cash US dollars. The cash reserves are huge right now. And once that trend starts to reverse, because the world doesn't move on cash, it moves on investments and growth and equities, then you will see a reversal in the dollar, in gold as well. But for now, I think it's where it's supposed to be, in the 17 to 1800s, with this much tightening and with interest rates rising, the incentives to own gold diminish, right?
Yeah.
And with real yields, like now you can literally, as a hedge fund manager, you can look and say, okay, do I want to own this stock? Or maybe do I want to lend this company money, the same company? Do I want to get 10 or 12% on this high yield bond with a great company behind it? Or do I want to own the stock, which can grow at 6 or 7% per year? We are at the end of this era called TINA, which is like acronym for there is no alternative, where bond yields were so low that you basically bought stocks like the FANG companies as a hybrid between a bond and a stock, because obviously a company like Apple or Amazon were deemed to be as safe as government. So we're ending all of this. We're getting back to a world with normalized interest rates, and that is something that people haven't experienced in 13 or 14 years. And now you will see a lot of pension managers and a lot of sovereign wealth and the big Wall Street money moving back into bonds. I think the real opportunity, if you're talking about these precious metals, is actually with silver. Silver is the most inversely correlated asset class in the world to dollar. So when the dollar is strong, silver is just getting demolished. I think it's down 40% since it peaked around $30. So If you're looking for a trade, I would say silver is a much more enticing trade than gold.
Yeah, and on that note, I think you made an interesting anecdote because I've been hearing a lot of YouTubers that I personally watch. They kind of everyone makes fun of owning physical precious metals because they're like, it seems kind of silly. What are you gonna do? Shave off bits of gold at the store and try and trade it for something? But I think the reason that there's value to it is the same reason there's value to crypto is that it's a decentralized sort of asset. Like the whole point of owning those assets is to get away from the stock market, to own an uncorrelated asset that isn't stuck in your computer, right? I mean, I think it's a prevalent thing to note that like if you don't have any uncorrelated assets, whether it's physical, like even art, like Rolexes or whatever, I mean, I think it's an important piece of the portfolio, like you mentioned, to always have a piece, because I own gold, I own crypto. I'm not like adverse to any of this, even though I may talk in favor, out of favor of these things. I still own all of them. But nonetheless, on that note, Leo, I definitely appreciate your time today. So I'm going to pass the question off to the viewers. This has been a very intriguing conversation. So let us know what you think in that comment section below. I'm going to leave again all the links to Wealth Research Group and some of the conversations that we've had today also down in the description. But on that note, stay cool, stay awesome, and as always, I look forward to catching you in the next one.